Are you struggling with the concept of supply and demand in your trading? Now, if you are, in this video today, I'm going to teach you exactly how to find those areas of supply and demand and how to correctly mark them on your charts. Now, over the coming months in this channel, I'm going to be sharing you some techniques, some tips and tricks with how to use supply and demand on the Forex market. Now, if that is going to be helpful to you and your trading abilities, then why not like this video today and of course subscribe to my YouTube channel. What I'm going to do first in this video today, I'm going to go onto the whiteboard, which is right behind me, and we're going to go through and we're going to actually mark out exactly how you're going to find those zones of supply and demand so you can identify the best possible areas where the market's likely to come back to. I'm also going to share with you a technique with using market structure to help you find those major turning points in the markets as well. Then we'll go over to some charts and actually demonstrate on a chart as well how you can look to draw this. So if you're absolutely new to supply and demand, then this is going to be a great opener to you understanding how to find those areas of supply and demand. So how do you actually find those areas of supply and demand? The simplest technique is understanding the trend in the market. So the first thing you need to understand is the trend. Are we in a uptrending market or are we in a downtrending market? Remember, you identify an uptrend with those higher highs and higher lows in the market, and a downtrend is with the lower lows and lower highs in a market. It's at these points where we know where the higher lows are in an uptrend is where you identify those areas of demand. And then these points on the lower highs in a downtrend is where you're going to identify those best points of supply. Now in a future video, I will go through other areas of supply and demand where you can also look to trade. So make sure to keep a watch out on the next video. In fact, I suggest to hit the notification bell right now on the channel if you haven't already done so. That will notify you when I bring the next video out. So this is crucial for you to understand the concept with a trend with the higher lows and the lower highs. Let's now go to the next part of understanding about market structure. Now this is going to help you to identify when the market reverses where an area of supply will be formed. If we have a market creating the typical higher high, higher low situation, then this is our last higher low unless the market goes above this high. If the market doesn't go past this high in the market, and then it has to come all the way down to break this low, which in fact will be an area of demand. And it has to break that low before we can create a new high with a new area of supply. And we'll go into this in more detail in a moment, but this area is not a previous low, or not a higher low, unless it breaks this high. This is a concept that many traders are not understanding. This is a pattern called the double top. You have been lied to. These patterns do not work. It's not when it breaks this low is it valid. It's not valid until we break this low. The only time this is going to be valid, and let me just quickly draw that once again, is if the market was to do this and break that high, then drop out. This is a valid double top. More on that in future videos as well. So when the market breaks this low, this will create an area of supply where you will look for a sell from. So that's all well and good, you're saying, understanding market structure with trends, but you came to this video today to learn to trade or learn to draw those areas of supply and demand correctly and how to find them. So let's now go into that, and then this will all make sense when we put it all together. Now I'm going to do some candlesticks on this whiteboard now to explain the concept. If we are in a bullish market and we see the market drop back down, then we're looking for the market to rally back out. This is where our high or low in an uptrending market. Imagine we're already creating the uptrends, the higher lows, higher highs. This becomes our higher low in the market. This is our higher high. Once this has been broken by this candle here, we create this higher low and then we mark out our area of demand. Now our area of demand will be marked from the lowest point of the move, projected that line out, and then from the open price of this bearish candle. We will then mark that out. This becomes your demand zone. Now there's many ways you can look to trade that zone, and that will come in future videos how to look at trading with an area of supply and demand. This is to understand the basics for you to how to draw and find them on your charts. So if the market now continues higher, you would be looking for it to come back down into this area of demand to look for a buy. Now this area here, this previous higher high in the market, where it once was an area of resistance and then it would turn a support. Now perhaps you've been trading with price action in the past and you learned about support and resistance. Now unfortunately this doesn't work as well as you may think, because when the market comes back to here, this is where the banks understand there's a lot of retail traders waiting for the market to come back to test this area of support, of previous resistance to become support, where that then we'll be looking to take a buy. Now very often we're going to see a pattern here which is going to be like a pin bar. You must very know about the candlesticks, and the pin bar is a great candlestick for a support and resistance trader to look to take a trade where they look to capture a trade to the upside. Now this is not where you will be looking to take a trade as a supply and demand trader. You want to be taking a trade from this area of demand. And very often this is where the trap comes in. It's because this candle doesn't go up off that area of that higher high. Remember, this has made a new higher high up here. But what happens instead is that we'll have a long upper wick and then the candle will drop back down. It's trapping in traders to buy off that area, that previous structure level. And then the market will drop down into the area of demand where you may well see a bullish reaction to the upside. Now that is how you would find an area and draw an area of demand. Now I'm going to go closely into an area of demand now. So the way you would draw your demand zone, this is how you look at drawing your demand zones. If you have a bearish candle, a nice bodied candle, followed by a bullish candle, you would draw your demand zone from the low and the open price of that bearish candle. That becomes your demand zone. That's one way you'll look at drawing out your demand zone. Now there's another way where we'll have a candlestick which can be more of a doji, but still closes as a bearish candle, again followed by that bullish candle. Now you draw the zone from the low and you then draw it from the high of that candle. This then becomes your demand zone. If you have a solid candle, then it's fine to draw it from the open price. But if you have an indecision candle like this, draw it from the high to low. It'll give you a better probability when you find the markets pulling back into those zones. Now the opposite is true for an area of supply. You would just be drawing a bullish candle. Let me just show you quickly. We'd have a bullish candle to the upside, followed by the bearish candle. You would then mark off your supply zone from the high, and then from the open price marked out, that becomes your supply zone. And if this was in fact a bullish indecision candle and a bearish candle to the downside here, say this was a bearish candle, in fact it would be from here. So if this was the bearish candle here, then instead you would mark your zone out as I have on the chart. You would mark it from the highest point to the low of that indecision candle, and then that would become a new area of supply. So that is how you would look to actually mark out an area of supply or demand on your charts. Now that is a simple technique of how you will find your areas of supply and demand on a price chart. Now there is another technique, which is what I call the rally-based rally and the drop-based drop. Now that's more advanced, and we'll go into that into later videos. This is more of an introduction video into supply and demand if you're absolutely new. This is going to help you to understand it. Now in the next video, I'm going to go over to the actual charts, and we're going to do the same thing on the charts and demonstrate how to mark those areas out on a price chart as well. So if you are now watching this video to this point, then don't forget to watch the next video coming up, which will go through to those price charts.